In this series, I'm going to share with you how to master support and resistance levels by using this simple and effective strategy. Now, the one thing I find traders mess up the most is they only focus on the micro view, the 1 day, 1 minute, the 5 day, 5 minute, the 15-minute chart, all intraday windows. What you want to do is go on your time interval, max time available, see 20, 30, 40 years back. And then you want to look at a yearly, monthly, weekly, daily aggregation period. I want to see the first monthly print ever in the chart history. I want to know what the all-time high and the all-time low is, regardless if it's relevant to the trading action right now. So we're going to use a micro cap example, and then at the end, I'll show you a big board example. In this case, the all-time high is $17, but it happened 4 years ago. The all-time low is 17 cents. It happened 5 years ago. I like 2 to 3 years. That's me personally. Anything more than that just doesn't make sense unless the price is very close to those old ranges. So I just want to zoom in on the time frame that's relevant to me. And in this case, I want to put a line at the high of the range here, which is 797, and the low, which is 101. Now we have both our ranges mapped out. We know what the top is, we know what the bottom is. So what I would do is just make a mental note again. The top is 8, the bottom is 1. That means we have a 7-point range in between that we can trade. Now, this is great to know as well because it'll show volatility in the stock. Now, if it's something like Tesla or Coinbase, there might be $70 range. It might be $170 range. It might be $270 range in this 2 to 3 year window. You have no idea. So each stock is going to vary, and I think that's important as well for the trading component of it. If you're swinging, if you're investing, and it's also good to know for the past 2 to 3 years, where is the price in relation to the lows versus the highs? So now this is the significant point, is that it goes all the way back to 2020. So this is a 5 year level that anytime it's traded below, it's had a very aggressive move or a lot of buying volume that has followed. Now, we could say the same exact thing on the flip side, right? Look at $8. It's very rare that the stock spends any time above 8 historically, besides this one factor where it did that 100x. So from this point, what I'm going to do is just focus on the range again. This is 2023, and I want to map out a few key levels on the monthly close. So for any of you that are unaware, on the green candle prints, the close will be at the top line of the base. For the red candles, the close at the bottom line of the base. So what I'm going to do is I'm going to map out the highest monthly candles, in this case 1, 2, and 3 of this sequence, and then I'm just going to mark lines for them. Okay, so from this point, now we have everything mapped out. We have all of the ranges on the top side, the downside, and everything in between. Now my job here is done on the monthly. I want to zoom in on the weekly frame to see if there's any correlation. Okay, so the more I zoom in, the more clear or the more fine of a view I'm going to have. We're now going to do the same thing how we looked at the monthly close on the weekly. So this pivot point, why I think it's so significant, is we come down from pretty much $8 all the way, it bottoms out, and then it tries to make that attempt back at the highs and fails. So this is a fail point. We're just going to put an F for fail, or a rejection point. We can call it a pivot point as well. So it tries to retest, it tries to stop this downtrend and retest those highs and fails. So I want to mark that point where it failed, where the buyers ran out of juice, where the bulls could not push it anymore. And that's 375. Okay, so I like that better. And the second thing here is once it came down off of that failed attempt, here was the second bottom. So here is like the first sequence where it came down, tried to reverse, and then failed. So this was like number one. And then the same thing. It stops here, it tries to reverse again, and then pretty much just sort of chops and then dumps. So what I want to do is focus on the highest close of this sequence. And this is a long time. This goes all the way back from July to December. So pretty much the end of December there. So that's like 5 months. So the close here would be 247. So I like that where it is currently. I think it makes sense. And when we zoom out a little bit, we could see that previously this area struggled where it was right here. And then same thing there. So there is correlation across the board. It also held as support, which is really interesting, right? This was resistance here. It then broke out, used this as support, and then it broke this level down and then rejected it again. So historically, this 375 level has acted as a floor and then a ceiling multiple times flip-flopping. So here it breaks out above, uses it as the floor right there, then breaks it down and rejects it. So what previously was support flipped as resistance. It then does the same thing again, right? from this point here, which is January of 23, it breaks out in July of 23. So this was resistance for 6 months at this 375 range. It then breaks out from July and does not break down until January of 24. So again, another 5 to 6 months of then support. And then it breaks down again. And from this point, the end of 23, early 24, we have never reclaimed this $3.75 range. So that is why it's significant. And that's why I'm going to make this pink so that we know this is a point of significance. So reclaiming that 375 would be like a bull versus bear case for me. So we could see now how well this works, right? Look at how well 375 holds support. Now it becomes very clear, right? Once it has this huge breakout in June of 23, right? So we mark that 623, right? It breaks out pretty much above 375 and holds this level for a very long time. Okay, so it doesn't break this down from June of 23 to January of 24. Okay, so this held support for 6 months and then has not broken out since. However, the reason why we know for sure it's bearish is this is a breakdown and a reject. This is exactly what we would take in an options. We would take puts right here because we know that this is a key support level that is now broken down, is retested that old liquidity, rejected, tested twice, rejected, third time rejected, fourth time rejected, and has not touched near that level since. That is why it's significant. And when we zoom in on the daily, we could see exactly how close the bars get, right? It wicks above, gets yanked down. 1 day above, red day slammed right down. Closes at 375, next day yanked down. 5 days later, a lower high, 365, a weaker attempt, and then just ends up getting crushed. So we know for a fact that the levels are working perfectly. And then look at 247. We have tested this line from June 26, 628, all the way to December here. So same thing here now. Look at how many times it's tested this 247 range for 6 months. It's just bouncing like a magnet. Look at it. And then gaps down. So this is how I break it down. You have to start on the monthly, then the weekly, then the daily confirms it. And everything now is clear to us. I would set an alert here at 247 at or above, and then just go from there. And what I could do on the flip side is the same thing, right? At or below 101. And that's it. So I get an alert here if we test or possibly break this key support level that we have not broken for multiple years. And then I'll look at the same thing here, this level that we have not been able to break out going back about 9 months right now, and it failed for 6 months straight. So we have a nice range established. We're about 25 cents from the floor, or about $1.20 from the top. So in this instance, I think you'd more want to look at this as a longer term play, something that, you'd maybe want to hold for a while, because historically it has been very volatile. But again, I'm not speaking on the fundamentals, I'm speaking just technicals. If you're enjoying this video, please smash that like button, subscribe if you haven't. Also turn on those post notifications so you don't miss any crucial updates on this channel. Now I want to talk about AVGO, that's Broadcom. It is a big board ticker, highly liquid. All the institutions traded, probably hundreds of millions, if not billions of dollars traded every single day. Much different than a micro cap, small cap, OTC, or penny stock. However, the same exact concepts apply. Now, I want to start with the major levels, and then we'll zoom into the small details. So the big thing that we're seeing here in AVGO right off the bat, take a second, pause the video, and tell me what it is you see first on this chart. I think it's very clear that we have major resistance at this 185 level that is now potentially turning into support. So when we look here, this was from June 16th all the way to December 12th. So this was a 6-month window from the beginning there to where it finally broke out. And now from that initial resistance point in June of 2024, now March of 25, broke out and now hopefully is using this as support or as a floor versus when it was resistance or a ceiling. And that is going to be the key for every single ticker, especially when we go and look back at the beginning of 2024. You'll notice the same exact trends in a few moments. So this is the major level here that I want to focus on. So if you want to make this this a different color or something that stands out to you, if you want to make a mental note, that's fine. Now, again, why is this level crucial? Well, if we go on something like an hourly chart, I think it becomes more apparent. So we see here that 185 acted as resistance here, right? When we're trading up, we see is just chopping. It can't break this 185 for a long time. Finally, it rips and breaks out after rejecting it multiple times for multiple months. Now, after $256 all-time high, it curls all the way down right back to that level that we saw 6 to 9 months ago and is now trying to hold this as a bottom. That is why it's significant. Now, when we zoom in, it becomes more apparent on why the level is crucial. And I like to use like a 5 day, or we could do like maybe 10 days in a 5 minute chart so that we could really understand the price action on a more micro frame. Very simple, right? We're coming down from $236 here. And what do we notice, right? The stock crashes all the way down, taps that 185, has a huge bounce up. The next day sort of gives us that false break below, rifles straight line up like a V-shaped recovery, kind of like that. Okay, and it goes from 180 all the way to 193. So this runs 13 points right after that. Okay, same thing the next day, huge rip up. Same sort of day. Okay, going on the fourth day, we break below it very quickly, rifle all the way up from 177 to 187. So this is like 11-point move right off of that low. And then as we close below for that first day, we rocket all the way up to $214. And then on Friday, which was the previous trading day, we then break slightly below and then rip all the way back up. So as of now, we've seen the bears try to sell the stock down in the open market, try to short it down, try to hold it below 185, whereas we saw the bulls are doing a great job of soaking up all of that stock below 185 and blasting it higher. That is showing me strong buying demand. If you want, for a mental note, we could make this green, something that stands out that you could show that buyers are stepping in here. I'm okay with that as well. And now what I could do is, if I'm a trader, I could use this 185/177 because this was really the low, this pivot point before it went huge, right? This was a massive melt up from 177 all the way to 214. This was almost a 40-point move, 20% move in one day. So this is definitely significant, showing the floor is in at 177. So I could use, again, two things to my advantage. I could use either this 177 as the bull versus bear, which is why I have it mapped out here, or I could just use this 185 because it's a macro level on the daily, weekly, monthly charts. Either way, it's all personal preference, up to you. I like to now mark this out as the bottom is in, and now ideally what we want to see here after this breakout, after all of this time of using this as resistance from June, July, August, September. Now we're in next year, January, February, March. That same level that we previously rejected here for 6 months straight is now hopefully holding as our new floor, as our new level of support. Flip-flopping, which is again the common trend between any stock that we're going to break down technically. Okay, so now the upside targets here, everyone wants to know, well, how do we do the opposite? Well, same thing. Look at the daily 1, 2, and 3 prints here. So I want to focus on the directional changes, right? 1, 2, and 3. The close of these prints, so pretty much the top of the base. When we look back at the trading, right, we sort of have a little bit of resistance here, and this goes back a while, right? This is not just like a day or two. This is the end of December, early January, where the stock is sort of fighting to break this level and gets rejected. It then sort of gets a false break and then crashes right below. So this has stayed resistance for quite some time, right? This is not 1 day or 2 days or anything like that. From December, it rejects it. Then it tries again at the end of January. It gets crushed all the way down massively. I mean, this is like 40, 45 points down. It then retests it again, 2.5. Okay, 2.5 here. It taps it and rejects, 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 rejects. You see how many times, it just ping pongs off of this level from 2.5 all the way to 218. Okay, so 218, it finally starts to curl down and rejects. So we've seen this major resistance at 236 now is our ceiling. And this is multiple months, multiple attempts. You could see how many times, if you zoom in, the price action just cannot break above this major resistance. So I would have no problem making this red, making this 3, so it really stands out. And now we could see specifically when we zoom in, look at this price action. This is the most recent price action. If I pull this up, look at this. I mean, it's really incredible how it just ping, like it's just a magnet. It just does not want to break it and then it fails. So 236 without a question in my mind, 100% confirmation this is the top. Now, the only other things I can focus on is when we try to stop, when the buyers try to stop this downward pressure here, again from 240 all the way down to 199. So 240 is the top, 199, call it 200, whatever, that's 40 points. It drops very fast. Now the buyers put the floor in there at 199 and they pop it back up, trying to retest those old highs. And then it fails right here. It tops out here. So it's sort of F fails there. That's the first fail. Then it takes a lower low. Buyers put another floor in. They try to stop it again. They make a second attempt at retesting those highs and they fail again at a lower high and rejects all the way down. Now again a 3, which is our bull versus bear. Now they put the floor in very clearly at 177. And so far, we have a massive move up. Now we broke that previous attempt. What we have to do is reclaim 214 for me to feel bullish again. Okay, which is why, again, our pink line is there. That's step number one. So all I'm doing is witnessing where they stop that downtrend and where there's that pivot point or that massive change in direction, that V-like recovery, and that's 1 here, 2 there, 3 here. And I'm just marking the levels accordingly. And I find it's very interesting that right at the top here where it rejects is exactly where the level pops and touches at the peak in after hours after earnings. Okay? So that is how I map everything out. That is how I get a clear and concise breakdown of where the floor is, where support is, where resistance is. All I do is I focus on where historically the stock has been strong, where it's been weak, and all we do by observing that is noticing where it bounces aggressively. So clearly this is a big level because from 185 it falls all the way down to 129. So again, this drops 55 points from June 18th all the way to August 5th. That's not that far. It's like a month and a half. The stock gets absolutely crushed. It's down 30% in a month and a half. That's a huge change. That's a very significant rejection point. So then the same thing happens again and again and again. Until we break it, this is the only level I focus on. Now, the same concept applies on the flip side, right? This support now is going to be crucial. So if we don't hold this support, then what do we look for, right? We just look for the same thing. Here would be step number 1. Here would be step number 2, step number 3, step number 4, right? And we just use the checklist going down like it has traded in the past. So I want to keep it short and simple. I try my best. I don't know. It's probably a 30-minute video. I hope you guys enjoyed it. If you're benefiting from videos like this where I break it down very slow, very simple, let me know your thoughts in the comment section below. If you have any requests for me, what are you struggling with as a trader? What is the problem that doesn't allow you to become profitable? I want to hear from you. If it's your emotions, if it's the ego, the mindset, the consistency, the discipline, just tell me below how I can help you become better, and I'll try my best to put out more content like that. If there's any tickers you want me to break down, anything I missed that you would appreciate, again, feel free to let me know your thoughts in the section below. Besides that, have a fantastic day, and as always, we'll see you in the next one.